Hello, everyone, and welcome. My name is John Harkins. I'm the Events Associate for the French American Chamber of Commerce, New York chapter. We are happy to welcome you to our webinar today, Cash Flow, Loan Forgiveness and Other COVID-19 Tax Relief Assistance. Just a quick word about our organization before we begin. The French American Chamber of Commerce's mission is to provide the opportunities, experiences, and understanding that empower successful business relationships between and for members. The FACC-NY chapter counts a mosaic of 1,000 members representing sectors from tech to food, finance, and other professional services. These members have complimentary access to digital events featuring top industry experts and leaders, as well as personalized member-to-member introductions, access to the FACC member directory, and of course, we'll be able to connect with other member attendees of this webinar. Now, this webinar will last around 45 minutes or so. So I encourage everyone, if you have any questions, send them in using the questions section, and we will do our best to answer each one towards the end. And of course, this webinar will be recorded and the slides will be available to all attendees, so don't worry about missing a thing. Now, just a bit about our speakers and topic today. With the 3 pieces of legislation signed into law in order to minimize COVID-19 downturn and the constantly updated guidance coming from the federal government, the crucial information on improving cash flow is often lost in the noise of it all. This webinar is part 1 of a 2-part series centered around COVID-19 tax relief assistance presented by Gray Tolub. Our speakers today are Benjamin Tolub and Armin Gray, founders of Gray Tolub. Gray Tolub specializes in domestic and international taxation, real estate, corporate, immigration, and trust and estate matters with clients ranging from high net individuals, family offices, and multinational corporations. We have a lot to cover, so I won't keep everyone waiting any longer. I will hand it over to Benjamin and Armin. Would you like to take it away?
Sure. So let's start with the first slide. I guess the next one would be actually the first slide. So a couple of things on this presentation. One, we actually started off. This is a 2-series presentation. We actually started off, we're going to talk about the tax provisions that may help your cash flow. But the SBA came out with a lot of additional materials regarding loan forgiveness. And coincidentally, which we were a little surprised because we thought the Senate would negotiate a little more regarding the PPP fix, which may be the last fix, which we hope it's not, because we hope there's further assistance for businesses, especially with some of the tax deduction, which we'll get into later in the next presentation. But because of the SBA guidance and fortuitously last night, the Senate passing the House bill regarding the PPP program, which we expect the president to sign into law very shortly, we then modified the slides twice, so we're breaking it up, including last night. We're up late just to make sure we give you all the information you need in the most timeliest of formats. So we're going to do 2 parts. Part 1, because it's new, it's fresh, and it's probably most affecting your business on what to do in the future to the extent you haven't already used the funds, if you were granted a PPP loan, or there's still money left. So I believe there's 120 billion left. If you haven't applied, you should seriously consider applying if you're eligible. So part 1, and this is today's presentation, we're going to discuss the loan forgiveness aspects that have been updated since, I'd say, about May 15, and particularly last night and last week with the House bill. So the first slide is just getting into a timeline. The SBA has revised guidance so many times that this program not only was rushed through Congress, but it was rushed through the SBA because of the need for funding. And therefore, the SBA is constantly revising or even changing or revoking prior guidance. So it's a little scary even for professionals. I'm sure even for business owners it's worse if you're relying on a prior guidance and suddenly they change it. Obviously going to affect your business. And it definitely has affected, I'd say, more than a handful, I would say a significant amount of businesses. For example, some who took the loan and then had to return it because political pressure, where they were no longer eligible or threatened not to be eligible, or at least extensively audited, and people didn't want to deal with it. So this timeline actually is really just discussing major aspects. There's actually been probably another 10 to 20, which we didn't include because they cover different aspects of the PPP program. But this just gives you a timeline of what was going on. So we're actually going to focus on the May 15th and May 22nd changes, and also yesterday's passage through the Senate of HR 7010, which is the fix to the PPP program, at least one of the initial fixes. Hopefully there's more. Next slide, or let's go to the next slide. So in terms of what we're gonna cover, so again, we're gonna discuss the PPP Flexibility Act and the SBA guidance. And there's two parts of the SBA guidance. One is the loan forgiveness, and the other are procedures really meant for processing the loan application and the lender's responsibilities. That'll be later towards the presentation. So we can move on to the next slide. Okay, so this slide, Benjamin is going to discuss all the, he was up real late last night. I don't think he got any sleep, so he's going to discuss all the changes. And then we're going to intertwine the changes. So we're going to discuss the SBA rules, and then we're going to see, again, there's probably going to be more guidance, but we're going to try to foresee the guidance and see how the act will change the existing guidance. So hopefully it's interactive and fun. So Benjamin?
Yeah, thank you, Armin. So as you said, there were existing rules until last night, and hopefully Donald Trump is going to sign the bill very quickly. But it goes into a very good direction, into the relaxation of the forgiveness rules. So I'm going to list the new rules actually that are really relaxed in terms of benefiting from the forgiveness for the PPP loans. So the first one actually is that establishes a longer maturity date of 5 years instead of the current or the old maturity date of 2 years. So it's not really clear whether existing or old PPP loans that were granted before the entry into force of the new law would benefit from the 5 years. But in any case, any new loans are going to benefit from the new maturity date of 5 years. So this new maturity date, of course, applies only if the loans would not benefit from, or part of the loans would not benefit from any forgiveness. So the second very important provision of the PPP Flexibility Act is the extension of the covered period. So as you know, the covered period is the period during which you can spend the money you received and benefit from the forgiveness of the loan under the conditions that we are going to discuss. So right now it's only 8 weeks, so it's very quick. Now it's going up to 24 weeks. So 24 weeks, it's 6 months, so it's much easier to spend the money you receive and benefit from the forgiveness of the PPP loan. So actually there is an alternate date or covered period is until 24 weeks or December 31st, 2020. So for example, if you get loan proceeds on, let's say, August 1st, so 24 weeks is beyond December 31st, 2020. But according to the PPP Flexibility Act, the deadline to spend the money and still benefit from the forgiveness is December 31st, 2020. The third rule, which is also very important, is the allocation of the cost between payroll and non-payroll. So right now, actually, there is a maximum amount of non-payroll cost of 25%. And now it's being increased to 40%. So actually, the House wanted even initially to suppress any of this limitation, but the unions insisted that the businesses were forced to use a big part of the PPP loan for payroll costs as opposed to non-payroll costs. We will provide you with examples, of course, about this very important new rule. So there is also some relaxation in terms of safe harbor rule to benefit from the forgiveness in case you have decreased the number of employees during the cover period as compared to the reference period, or if you have decreased to wages, and we will go also into more detail. Next slide, please. There is also more flexibility under this act about the starting date for the repayment of the loan and the payment of interests. There is also a relaxation about the tax rule because if you benefit from forgiveness, you can still benefit from the tax provision to defer the payroll tax payments. And finally, there is an extension of the application time frame. So under the current rule or the old rule, you have until June 30th to benefit from a PPP loan, and now it's extended until the end of the year. Next slide, and Armin, to you. We cannot hear you, Armin.
Sorry, I keep mute because I was coughing. Sorry.
No worries.
Thanks for reminding me. So the way we're going to try to structure this to make it more interactive for the audience, and you can ask questions as well. So if we get the question on the current topic, we'll answer it. Otherwise, if we go to the next topic, will have a Q&A session at the end. But we're going to try to discuss this interactive. So we're going to discuss the old rules because some people may have already spent the funds, and if you use those rules, the Flexibility Act only makes it easier to spend the money. So the old rules can still be very pertinent anyways, subject to further guidance. So we're going to cover both, but then we're going to interact and say, okay, this is the old, and then here's what the new does. At least we think it's going to do, subject to further guidance. So just very generally, I'm sure everyone's aware of it. But it's good to just read the language and just to go over the bigger piece of the picture. So you get the PPP loan, but really, I mean, some businesses would like now it's up to a 5-year loan at a really low interest rate. I think a majority of especially smaller businesses, it's more like a government grant, and the loan, if you meet certain requirements and you do everything that's required, it basically turns into a grant that is non-taxable income. So it's just basically a cash infusion. Why they structured the program this way, I'm not sure. It seems not that efficient, but they devised it this whole way rather than just giving businesses cash or a certain size based on a certain revenue. So again, this is the way they structured it. We'll have to live with it. I think part of the reason is they just didn't have enough employees. So they thought they go through banks because they have the infrastructure to possibly dole out the cash and certify the requirements. So I think that's the reason. But again, it's not the most efficient. But in general, you want to turn it to basically a government grant, and the cost incurred is payroll costs, interest payments on any business mortgage obligation that was incurred before February 15th, 2020. This is important. So you had to have the loan before, the mortgage before February 15th. Payments on business rent obligations or covered rent obligations, that's a statutory language. Again, in force before February 15th. We're going to get into this later in examples. And then other specified utility payments that a service began before February 15th. The reason behind this is they don't want people forming a new business to get the government grant, so they devised rules and limits such that we want to really target businesses in existence who are affected, and that makes sense, right? This is because of coronavirus. If your business is affected, they wanted to help you out. I think we can move on.
And this rule has not changed. So the PPP Flexibility Act did not change this February 15, 2020 provision.
And Armin, I do have a question before we do move on, if you could answer. The question is, if I ship products to customers and pay for the freight costs, is that covered under transportation?
That's a good question. I don't know off the top of my head. I'll have to double check that. Let me get back to you. Can you, John, can you just make a note of that, and then we'll respond to that person directly? I just have to reread the guidance to see if it's in there.
Absolutely,
I don't remember off the top of my head. Benjamin, do you remember off the top of your head if they talk about freight
So
costs?
yeah, so just thinking out loud, transportation would refer more to personal transportation. So I would believe that it will not be included, but we can double check.
Mhm. And just a note to all attendees, the information to ask questions after the fact will be included after the webinar, so no worries there.
Because also this is part of the business utility payments, distribution, electricity, gas, water, transportation. So all these items are related really to the day-to-day operation of a company. So I would tend to say that the question that you raised should be answered by the negative, but we can double check and follow up.
Okay, well, moving on.
Very good question. So this slide is just, it's a very general what we're going to cover, and I'm going to go very quick because I don't want to spend too much time. So these are what we're going to try to cover. What are the payroll costs? What is the covered period? Benjamin already mentioned that on the first slide. What are the non-payroll costs that are allowed to be expended on if you want this government grant? When do you have to incur the cost? This is very important, and we'll get into it later. What if I don't meet the requirements? What happens or only meet 50%? What happens? What are the procedures, to get the loan forgiveness? Again, May 15th, they came out with an application, and they gave some guidance on May 22nd, both on the borrower and lender side. And then one question is, what if I'm denied? What are the process to appeal, et cetera? Do I have a right? And we'll get into that later. I think we can move on. Okay, so the most important rule, everyone knows this rule. So you have to spend 75% on payroll, covered payroll costs, and 25%, at least this is the old rule, on other permissible costs, which we already mentioned. So again, mortgage, rent, and utilities that are covered or specified. This is, oddly enough, this is really the 75-25 rule. To the best of my understanding, knowledge, and everything I've read and reported in the media, it's made by the SBA. It's not directly in the CARES Act, but the rule, basically, the PPPFA, which modified recently codified it. So Benjamin, you want to talk about the new rule?
Yeah, sure. So that's really an important rule, this 75-25 or 60-40. So clearly, it's a relaxation of the rule. And as a business owner, you can see this rule in general are two ways. So either you look at it and try to strategize the expenses, or you just go with the flow, make some expenses, and afterwards, after the tax, you need to determine at the time of the application for forgiveness, you need to determine what amount is going to be forgivable and what amount is not going to be forgivable. So also, as I mentioned earlier, actually the old rule pushed much more into putting cost into payroll costs, so into employees and salaries. And there was some congressmen that wanted to suppress entirely this rule, but over the pressure of the unions, they decided to keep like a limit, and it was the new 60-40 that was provided. So what does it mean? So it means that, and we will go to an example, but it means that if you receive a PPP loan of $100,000, the minimum authorized expense would be $60,000 of payroll costs, and the maximum forgivable amount of non-payroll costs would be $40,000. So it really set a limit to the expenses that would benefit from the forgiveness of the amount. So it doesn't mean that legally speaking, you cannot spend the entire $100,000 into non-payroll costs, for example, leases and other expenses. However, it's going to be to remain a loan with a maturity date and a repayment date, and it's not going to become a grant. Go ahead, Armin. Maybe next slide. We cannot hear you.
Armin, you might be muted again.
I was coughing again. I don't want to interrupt Benjamin. Sorry, I remember. So this just lays out the question, the timing. When do I have to make these payments? And you have to make it during the covered period, and it has to be paid or incurred during, at least the old rule is 8 consecutive weeks after the loan was given, and then they go into alternative covered periods, which we'll cover a little later. But this rule, again, this is now modified, so it's a little bit moot. And Benjamin, do you want to talk about the modification real quickly?
Yeah, definitely, because the covered period increased tremendously up to 24 weeks. So before you had 8 weeks to make expenses, and during this covered period, these expenses were forgivable, and now you have 24 weeks to make these expenses. So or until December 31st, 2020. As I mentioned earlier, for example, if you have loan proceeds on August 1st or September 1st, plus 24 weeks is beyond December 31st, 2020, it would be somewhere in 2021. So December 31st, 2020 is the cut. So any expenses beyond December 31st, 2020 would not be forgivable. However, you would still be allowed to make expenses. However, they would remain loans and would not become grants. So that would be a pity, clearly, because the goal is to have the entirety or most of the loan become forgivable. Go ahead.
So this is under the SBA guidance. We don't think it's going to change, so that's why I include it. But the question is, when must costs be incurred and what are the rules? So again, payroll costs are considered paid on the day that paychecks are distributed, or you get an ACH credit transaction. So I'm assuming many are on direct deposit, but you're still given paper checks. It's when you distribute them, and you should have proper documentation. We'll get into documentation later, but that's the general rule. Again, so now during this period under the old rules, depending on the 8-week period you choose, you can get different results, and they want it to be lenient. So they've devised this alternative payroll covered rule, which basically gives you a little bit of extra time. I don't want to get too much into detail because you probably already heard it, and it may be changed. But generally, just gave you a little bit of extra time to make the payments, and they're a little lenient on if you paid or incurred the cost. So we'll get into an example later, which will explain what I'm talking about. So we can just leave it there because it'll clear it up. So the alternative, the next slide is talking about if you're using different payroll methodology. Again, this is all modified now. It's up, as Benjamin said, it's 24 weeks. So these rules we think will probably still be in there. I might give you a little bit of benefit, but you probably don't need it, because now they're giving you, 3 times as long, but maybe you do. But again, the SBA may revise this. So our comment is.
So by the way, sorry to interrupt you, but something really important, the PPP Flexibility Act did not modify the calculation of the loan itself. So maybe that's, a good reminder. The amount of the loan stay the same. Right? It's only the mechanism of forgiveness that is changed. So go ahead, sorry for interrupting.
Yeah, I just don't want to run out of time. So let's speed it up. Let's go to the next slide, because we're going to talk about these in an example.
Yeah.
All right. So this example, at least under the old rules, let's say your covered period began on June 1. Your first payroll cycle is on June 7th. So the SBA rule says, well, you can use an alternative covered period, and we'll start on June 7th. And that'll elongate it till August 1, rather than if it would tack on some time. Again, it's either you paid or incurred the cost, so that's a benefit, because if you didn't pay it but incurred it, they'll still give it to you. Next slide. So this one is talking about, again, how do you use the funds? We already discussed it. So it's 60-40. Again, it's really important, 60% on payroll, 40% on non-payroll. That's permissible, which is the qualified expense we just discussed earlier. Let's go to the next slide because we have examples.
Yeah, so maybe I can take this one.
Yeah, go ahead.
Yeah, so in the example, we have a small business that borrows $400,000, right? So as I mentioned, you have two ways to do it. The better, I mean, and of course, actually, is the first one that is better to do it if you can, is that you receive a loan proceed of $400,000. You know, by the way, what we recommend in practice is that you open like a segregate bank account actually to put this money. So it's easier to track the expenses, right? And even actually that what would be even better is that you could even segregate in two sub accounts. One actually allocated for the payroll expenses, if you can, and another one allocated to the non-payroll expenses. So in this example, if you can strategize, so you receive the loan and then you're thinking about the strategy of the expenses in order to benefit, to maximize the forgiveness. So you take here $400,000. And you know, with the new rule, you multiply $400,000 by 60%, and you have $240,000. So $240,000, if you can, based on your business model, you should allocate it entirely, you know, at least $240,000 to payroll expenses. If you want to allocate the entirety $400,000 to payroll expenses, good for you, because clearly the 100% of the PPP loan, unless of course there are other reduction, and we will see based on the wage reduction and the employee reduction, but based on the 60-40 rule at least, you would be able to benefit from a forgiveness on the entire amount. But let's say the minimum amount for payroll cost here would be $240,000, and the difference, which is $160,000, can be allocated to non-payroll costs. So if you can strategize in advance, do it, right? So now another example, you didn't strategize, for example, and you received the $400,000 and you started just to run your business and make expenses, right? And then you realize that you spend, you know, like for example, $200,000 in non-payroll expenses and $200,000 in payroll expenses. So what you do to determine what can be forgivable is you take the amount of payroll expenses, 200,000, and you divide it by 0.6, which is $333,000, which is the envelope, the global envelope, the maximum envelope forgivable in your case. And then it means since you have spent $200,000 in payroll expenses, it means that the balance, $133,000, is going to be non-payroll cost forgivable. The balance is not going, so 66,000 is not going to be forgivable. So I think we can go to what are payroll costs. Perfect, thank you. Go ahead, Armin.
Yeah, so it's basically payroll costs are basically everything you pay to an employee, and you can just list that out. You can read it yourself later. Again, it's just cut and paste. The only interesting is partnerships came out with multiple revised rules. So the initial guidance said, you know, apply separately for self-employed. Then 3 weeks later, they said for a partnership, include a general partner who's deemed self-employed on your tax return. Actually include that as payroll cost. And then maybe a couple of weeks later, they told you how to amend it, which for most people You probably couldn't amend your application because the time expired. But if you were a little slower, you may have got lucky and you had to coordinate with the bank, and banks were super swamped. But that's the only interesting part, at least that we'd want to highlight. The other points are compensation is always subject to a $100,000 limit. That's just the rule. So the goal is not to cover costs of highly compensated employees. So they put a 100,000 threshold, and it's prorated based on the covered period. Again, the old rules, you're talking about a covered period of 8 weeks. So now is the covered period 50? Is it 3 times as long? Is it 24 weeks? That is the question, and it seems though that's what the guidance would say, but the SBA will probably clarify all this. The other thing though we'd like to highlight is if you're an owner and employee of the company and you're self-employed, you're supposed to get under the SBA guidance. They did just a simplified calculation because it's all rolled up into self-employment, and you have to worry about all the intricacies of payment of compensation. They just said 8 over 52, which is 8 is the covered period. So now the question is, well, is it 24 over 52? And will they, what is the guidance? And it seems a little odd because basically Congress wanted to give 2 months payroll costs, at least the initial guidance under the CARES Act, for self-employed to, help them. So the amount doesn't change. So your PPP allocation, if you're making 100,000, I think it's around 15,385 if you do the calculation. So 15,000. I believe 385, if I remember correctly, the last 3 digits. So that's what they wanted to grant you. In terms of loan forgiveness, now, does this mean do you do it over 24 weeks? Did you just triple the compensation you can pay to self-employed rather than employee? And this makes a big difference because it's unfair because if you're a C corp or an S corp, you're technically an employee and not self-employed. So thus, these rules should mirror one another. But again, there's going to be some guidance that needs to come out because an employee, there's the covered period. Did you just triple the amount you can compensate based on the Flexibility Act, such that to cover your expenses, or are they going to keep them out? So again, there's some uncertainty. And again, if they go one way, and they'd probably have to treat owners the same way, which seems unfair. But again, it all seems a little odd once this comes in, and we look forward to the guidance. Benjamin, do you have any comments on that? I'm going to steal your thunder, so I apologize.
No, that's fine for now.
Next slide. So non-payroll costs, again, we already touched on them again. So leases in existence, mortgages in existence. Again, February 15th is a key date, and then utilities. We can go to the next slide just because I don't want to run out of time. It's already almost, we only have like 25 minutes left. So one of the questions is, you might get people who cannot hire enough people back. For a variety of reasons. One they don't want to come back because they get more money under unemployment, or maybe they're scared because of COVID, or maybe they got a better job. So you're wondering, well, how does this all affect me? Or, I can't meet the 75 under the old. Now it's 60% payroll costs. So can I do prepayments? So how does this work? And can I cover, expenses under prepayments or expenses incurred prior to the loan being granted or February 15th, such that I was delinquent on the bills. But it's again, if you look at the SBA guidance, it said paid or incurred, right? So the instructions to the form and the guidance based on the language paid or incurred seems to say yes, other than mortgage, because mortgage is actually in the act and in the SBA guidance. They expressly say you can't prepay, more interest on mortgage, etc. But the other ones, they don't actually say it. But the act, if you go to the little language of the act, it says you have to pay it and incur it for the loan forgiveness portion. But the SBA, the guidance, if you read the rule, it says paid or incurred, and there's a debate. So some people, if you go and if you run a quick search, Some people might say, well, yeah, maybe you can take it and prepay. Other people would say no, and be very careful because the SBA has revised their guidance so many times, and based on the literal language of the act, they find it contrary to the intent of Congress, as well as the literal language that, for example, well, let's hold off an example and let's go to the examples, and maybe Benjamin can cover some of the examples.
No, go ahead, for now.
Well, I'll tell you the example, and Benjamin, give me your thoughts, and then I'll chime in. So, example one, and we try to keep you engaged, so we're trying to make this a little funny, but let's say the Joker, we're in Gotham City, and some of you with the protests and everything that's going on, you might think yourself, as in at least right now, it reminds you of a Batman movie, but let's say the Joker organized a COVID-19 party for the reopening of his family's business at the end of the lockdown. He invited his friends, his family, his political allies, all, a bunch of other criminals, etc. And he spends $100,000 on entertainment costs out of his, in our example, it's a $400,000 PPP loan. So he got $400,000 in, and then he spent $100,000 on entertainment costs. Again, it's incurred. Let's assume it's incurred during the covered period. So Benjamin, what do you think? We can get that $100,000? Is that a qualified expense? It's on entertainment business.
That would not be a qualified expense. So what does it mean? It means that you have spent $100,000, not a qualified expense. So there is remaining $300,000. And to go back to the 60-40, so on the $300,000, if you strategize in advance, you calculate 300 multiplied by 60%. So you can spend $180,000 of payroll expenses and 120 of non-payroll qualified expenses, right? Good. Next example.
Right. So it's not a qualified expense. So again, it's interest. It's a lease expense, a covered rent, and certain utilities, right? So entertainment, you can't throw a party for yourself on taxpayers' dollars, right? That's good. We try to make it a little funny, but let's say now you have a very creative and cunning person. He says, well, look, counselor, look, CPA, or the professional. Hey, I spent $100,000 booking the event hall. That's a lease. I signed the contract, right after I got the funds, right?
So good try, yeah. Yeah, good try, Armin. But the problem is that it's been agreed upon after 15th of February 2020. Therefore, this expense is does not qualify.
Right. So example 3, well, he's like, look, I had a mortgage on February 20th. It was originated on. So what about that one? That one counts, right? It was before I got the loan, right?
Yeah. So this one either, February 20. It's after 15th of February. Yeah.
Right. So remember the rule. It's the February 15th. You have to have it before. So next example. So now he's smart. He's like, look, I'm not going to hire my workers back, and I don't need them anymore because I realize I can work better without them. I'm more efficient. I leverage AI, etc. I don't want to hire them back. So let me use the funds and prepay my rent. For where I'm my lease is. And let's say it's a call. Let's say you meet all other requirements, and you prepaid it right before the covered period ends, whatever the covered period may be, based on the revised act. So does this work, Benjamin? What do you think? Prepaid rent, can I pay for the next 5 years and get the max amount in your example of the 40%?
So actually, this is tricky because if we read it strictly, there is, if it's either paid, the rent is either paid or incurred. So here it would be paid during the cover period. Of course, it needs to be paid during the cover period, so it could qualify. But so we really wonder if it's just a loophole, or there will be some SBA guidance that prevent this kind of abuse of law. or whether the SBA, in reviewing the forgiveness application, will just deny this kind of forgiveness. What do you think?
Yeah, I mean, it seems contrary to the intent of Congress. And also, if you read the covered period, they basically give you to the next payroll cycle to make expenses, and it's qualified, right? They gave you an extra couple of weeks to make expenses. They don't. It doesn't seem they want to give you 5 years to prepay it. But again, if you read this stuff literally, if you read the little language, it says paid or incurred, well, it's either or.
Yeah.
But then if you go back to the act itself, if you read the little language, it says under the loan forgiveness, so you have to actually go down even further. It says, you might miss it, but it says paid and incurred, right? So this is not incurred during that period, and therefore it seems you wouldn't get it. I bet if politically, if people start doing this, you know, there might be some pressure for the SBA to tell them no. I think if you run searches, we're not the first ones to highlight this issue. People are already discussing it. Some people say yes, some people say no. You should really be careful.
But anyway, it's still, in terms of policy, it's still good for business, because if you prepay some rent for the next 5 years, it means you want to continue your business, you know, on the longer term. It's good as well for the real estate owner that receive, you know, that's been penalized. Actually, many real estate owners have been penalized during COVID-19. So at least, why not? In terms of policy, it's good for business in general. Go ahead with the next example.
That's what the lobbyists would say. We'd also like to point out that, again, the Flexibility Act kind of makes this argument moot for, again, this is an extreme example. Before it was you had 2 months, basically. Well, now you have a lot longer. You have basically almost till December 31 for, you know, or a little bit earlier. So you probably, if you make 5, you know, a monthly, you know, or 6, you know, rental payments, you might get close to the 40% of cost now, because so maybe this is moot, but you know, it's something to think about. So the next example is, let's say Joker, you know, he had a change of conscience. He's like, look, he had a change of heart. He's, look, I'm gonna rehire everyone, but I didn't hire, like, New York City wouldn't allow me to even open up my business. How can I rehire people? So I rehired them. I'm gonna pay them back pay. And again, it's the PPP loan is about 2.5 months of your, you know, when you do the calculation, and 2 months is supposed to be allocated payroll under the original 1.5 for other things. Now, again, that's revised. But he's like, hey, can I give them a bonus that, let's say the salary is 100, can I give them a bonus, and basically their annualized salary is 130, and for whatever reason, I want to spend 0 on the non-payroll costs. Can I make a cover up by giving them a bonus when the employee makes 100? So what do you think, Benjamin? Did we lose that?
Yeah, go ahead. I lost the track.
So the answer is, remember, it's limited to 100,000. So if you pay someone over 100, and we'll get into this later, there's actually a reduction. So this can only work if you're paying your employees less than 100 annualized. So yeah, up until 100, but over 100, there's going to be a clawback. So this doesn't really work as planning.
Yeah. So that's a good point, and as well, and you know, we can mention that already, because I don't think we'll have the time to go through it. But there is an application form actually to benefit for the forgiveness that business owner that receive loan proceeds need to file, and it's going to be submitted to your lender and to the SBA. And in the application, you will see at a certain sub-form that is the Schedule A worksheet. There are 2 types of employees. The first one is a type of employees up to $100,000 of salary. And for this type of employees, there can be a reduction in loan forgiveness if there is, for example, in the reduction of wages. And you will see there is a table 2 in this Schedule A worksheet, specifically for the employees that have a remuneration higher than $100,000. And for them, you know, by definition, since it's limited to 100K, there is no reduction in loan forgiveness. Go ahead, Armin.
Yeah, so the last example is, let's say you had a lease, it was in force, you meet the requirements, but it expired, let's say March 15th before you got the loan. So under one option, he renews, and the other option is he moves to a whole new premises. So what happens with this February 15th rule? Recall, it says you have to be the lease has to be in force, before February 15th. So what does in force mean? And what if you renew your lease? Were you in force? The answer probably yes. For renewal, that's my guess, because again, you had a lease, you're just kind of extending it. The other one, though, if you move and get a completely new lease, why would you want to penalize it? Again, I think the SBA should send out more guidance, but we just thought to throw it out as some interesting facts there. Can we go to the next?
But also that's a very good point. So it means that, going back to the strategy, if you have some options, if you're in a situation like that, actually, where you are in your lease that you signed before February 15, 2020 expires, and then you sign a new lease on March 15, and if you can allocate the PPP loan to other expenses, other than the lease, you should really do it to make sure that you benefit from the loan forgiveness. Next slide.
I just want to cut in quickly, gentlemen. I think as we are coming quite close to the end of our time together, I think if we do one more slide and then spend the rest of the time answering the questions that have come in, I think that would be most beneficial.
Yeah, so maybe instead of just talking about the next slide, and if you can go to the next slide, which is called reduction on forgiveness.
Mm-hmm.
So generally speaking, actually, that's very important. There are three ways the PPP loan can be reduced. The first one is the 60-40, and we talked about it, so you understand how it works, right? 60% at least must be allocated to payroll costs, and 40% at the most to non-payroll costs. If, for example, you have an allocation 50-50, it means you have allocated too much to non-payroll, and there will be a forgiveness reduction. The second way of possible reduction is that if there is a reduction in the salary of the employees during the covered period as opposed to a reference period, right? So somebody during the reference period, so i.e. before the covered period was paid, let's say $100,000, and during the covered period, actually annualized, during 1 year, he paid $50,000. So he had a cut of 50% of his salary. So this is going to trigger a loan forgiveness reduction. The same thing is going to trigger a loan forgiveness reduction if there is a reduction of employees, right? So let's say you had 10 employees before the covered period, and during the covered period, you go to, let's say, 5 employees. It's clearly an employee reduction, and there will be a reduction of loan forgiveness. As we briefly mentioned, there are some safe harbor, however, that if you have actually this reduction is wages or reduction is number of employees, but you rehire or you re-increase the amount of wages before, under the new law, before December 31, you will still be able to benefit from the loan forgiveness. That's very important. There is also, for the reduction of wages, there is also another safe harbor within this rule, is that up to 25%. So if you reduce the wages of an employee up to 25%, it's not going to trigger a loan reduction. And of course, we can go into many details. We can go into the example of the application, but really you will see it's pretty easy because everything is very mechanical. You just need to follow the instructions and follow the flow. Mm-hmm. Go ahead, John.
Sure. So I'd like to just hop into some questions while we have 5 or so minutes left together. Seeing the changes, if now the salaries only need to be 60% of the loan amount, can we apply for an additional loan if we already received one?
So go ahead, Armin, but I think the answer is no.
Yeah, I think the answer is no. You only get one application, and the reason I'm going to say no is, so partners of a partnership, for example, who applied under the original guidance, they would do a PPP calculation not including the owners, and that's different from a C corp, which again the owner is an employee. So again, a partnership is different because it's a flow-through entity. So those people, it's one loan, one application, and you have to amend it by a certain time frame, which by the time they told you how to amend it, it was basically too late if you got first round funding. So I think the SBA's standpoint is one loan and one application, and unfortunately, they're not making amendments at this time because I think the reason is why they made it stringent and why some people lost out on this is they thought they're going to run out of funds. But it seems a lot of people return the funds based on, again, their change of guidance regarding that certification for publicly traded companies and others who above 2 million who have, quote unquote liquidity. So people return funds. So they actually have 120 billion left. So what I would recommend is you should certainly lobby your congressmen, your senators, et cetera, to change it and allow things to be amended. But I believe the answer is no. And yes, you should certainly lobby for changes because some people are being treated incredibly unfairly. And you have to realize they're borrowing money from future generations. And this has to be paid back. So if you don't get what you're entitled to and other people are, you're going to be paying back things that you should be entitled to. So it's really, you can think of it as a loan. As long as you're going to be in business and you're not going to retire, your tax rates have to go up. If it's not next year, in 5 years, 10, it's just not sustainable. So yeah, I'd highly recommend that you lobby your Congress, et cetera, to make sure they allow amendment, especially if there's 120 billion left.
Yeah, very good point.
Just to kind of add on to that so we have much more clarity. Similarly, as the loan was calculated using the 8 weeks with the Flexibility Act, is it possible to ask for forgiveness for an amount higher than the initial loan?
No, higher than the loan. It's an official loan. It's not possible. I mean, because you first receive a loan, and the PPP Flexibility Act, as we mentioned, has nothing to do with the loan, the amount of the loan itself. So, for example, to calculate, let's say you have an employee that makes $100,000, right, a year. So to calculate for this employee the related amount of a loan, right? You divide actually. So you take the $150,000, you divide by 12, and you multiply by 2.5, right? So it's $20,833. So this is the amount of PPP loan that you can apply for, right? So this does not change. The only thing is that you are going to receive this $20,000 for this employee, right? Now you have 24 weeks to expand it. And still, so because the covered period to expand the money that you receive is much longer, right? However, the amount of loan itself that you receive stays the same, and you can never have actually a forgiven amount higher than the loan you receive.
Yeah, the way to think about the change, it's very simple. They're just extending the time frame you have to use the funds. And the reason for this is a lot of people were complaining that this, for a lot of businesses, especially forced shutdowns, the business has to remain closed. So if they got a loan on 4/18, my business has to be closed. So yeah, I can pay the workers, but it doesn't help my business. Like I can just pay them for doing nothing. So why it makes no sense for me to have this loan, and then you have to do all the record keeping, the application for forgiveness. No, I'm not going to deal with it. So basically, they extended the time for you to use the expense, but nothing other than that change. And really think of this for a restaurant, or if you're in New York City, especially with the protests and some rioting going on. you can imagine that they cannot use the the funds, especially 75% of payroll. So that's all it is. It's just extending the time.
So really, it's really just a the PPP Flexibility Act is just a relaxation of the rules to benefit for forgiveness. And once again, it's huge actually, the forgiveness, because it become a grant. So initially it's a loan. If you meet all the requirements for forgiveness, it's a grant. You just receive some money. You don't have to pay it back.
Just very quickly to finish off with one last question. Concerning employers who are trying to use PPP money to pay employees back for what they owe them from early March before the shutdown, are they allowed to use the funds for back pay owed under this current act?
So what is the rule? I mean, it's paid or incurred as well for payroll cost, right?
Yeah, it seems to be paid or incurred. So it seems to be okay. But again, we would, you would be very careful just to make sure that the SBA doesn't change their guidance. And also, again, the CARES Act, the language might require "and." So I'd want to double check to read the exact language on payroll costs to see if there's an "and" in the CARES Act. If if you give us your name, we can follow up, because we pulled it up actually.
So also, something very important is it's all about strategy as well, right? So if you're talking about employees and you kind of keep these employees on the payroll during the covered period, please allocate the loan to payroll costs incurred and paid during the covered period, and use other money if you can to pay amount that you owed regarding period prior to the covered period. It's all about strategy as well. Sure. But I think that if the law provide the guidance, which is paid or payroll costs paid or incurred, normally, actually, even if it's paid and relates to amount that you own, payroll costs that you own for a period prior, normally it would be treated as qualifying. But again, if you have the option, try to strategize and pay payroll incurred and paid during the covered period.
Sure.
Yeah. One other thing to add, because I just want to, one of the internal limitations, by the way, so this is why your question might not be answered in like a FAQ of the guidance, because there's an internal limitation. Remember, you have to take your salary annualized and then prorate it to the covered period. Again, it used to be 8 weeks, but now it looks like 24 weeks. Again, you need the SBA guidance. But if you pay someone like $100,000, let's say for the entire year, you pay in 1 day on the covered period, they may claw it back, because you're supposed to, your max amount to be paid in that covered period of, if it was 6 months, in theory, mentally, at least intuitively, should be $50,000, right? So if you pay someone $60,000, but they're only entitled to $50,000 max under the statutory guidance, then you have $10,000, which might not be covered. Again, I would recommend, and what I would do to answer your question is go to the form application, which, if you look through our slides, at the end of the slides, you can see it or pull it up, and then just run a calculation and see how your numbers would play before you make that payment, right? Because once you do the calculation, if there's a chargeback because of the way that calculation works, it's very mechanical. As Ben said, you may be just screwed yourself. So I would, before I would answer your question, look at that rule, double check the language, and then see, run the numbers. You have to run the numbers.
Yeah, so that's a very good point. And maybe, John, to just finish on that, to give an example. So before, under the old law, so you took, for example, the maximum amount of $100,000, you divide it by 52, 52 weeks in 1 year. So it's $1,900. You multiply by 8 weeks under the old rule, and it was $15,384 per employee maximum to benefit from the forgiveness. And under the new rule, it's easy, because it's so you do so the same thing, so 100K, and I just calculated while I'm talking, divided by 52. So it's a remuneration of $1,900 per week. You multiply it by 24, and it's about $46,000 per employee that can be forgivable.
Mm-hmm. Well, Benjamin, Armin, I know that we went a little over, and that's okay. I just want to mention to the audience that while we did go a little over, we did not get to go through every one of the slides. I just like to, re-mention that the slides will be sent to you tomorrow, as well as this recording. And Ben and Armin have graciously agreed to provide their information should you have any questions beyond that. I would also like to reiterate that this is part 1 of a part 2 series where we will be not only following up on maybe some aspects that we did not cover today, but further updates and future information for all of us to know, understand, and ask questions about. So Benjamin and Armin, thank you so much for dedicating this time, and for the things that we did go through, thank you for being so clear and thorough through all of it.
Thank you, John.
And to the attendees, I'm looking forward to seeing you to our future webinars, and I am looking forward to not only getting your questions, but also seeing you soon. Thank you all to everyone, and take care.
Thank you, bye.